providing financial straight talk for those working and enjoying life after work. This is America's financial headquarters.
A couple of weeks ago, you had talked about donor-advised funds. What's the difference between a donor-advised fund and a private foundation? And which one might make most sense for me?
Well, appreciate the call, Steve. It's a great question, and it's one that we get asked quite frequently. Mike, our firm works very closely with National Christian Foundation with donor-advised funds. There are certainly other donor-advised funds out there, so we're not going to really spend a ton of time discussing National Christian Foundation and their specifics from a donor-advised fund standpoint. But I think it's important to understand the differences between a donor-advised fund and a private foundation. Steve brings up a very good question. We're going to go through some of the nuances between the two, but it's important to know coming up on Thanksgiving week, this is a big time for giving. We give thanks, but it's also, when we go into the last month of the year, it is the biggest time of the year for charities.
Yeah, and those organizations that you just mentioned, whether it's a donor-advised fund organization or whether it's a private foundation, they are working their tail off from Thanksgiving through New Year because a huge percentage of the giving dollars and the giving assets that come in are all flooding in right now because everyone wants to get them in before the end of the tax year.
That's right. Now, with the fiscal cliff looming, there's been a couple of different schools of thought on whether you should give this year or whether you should wait until next year in light of the tax, the potential tax increases that you're facing. We're not going to get into the pros and cons there. Giving kind of comes from a financial planning and a tax planning perspective, but it also comes from the heart.
Yep, definitely.
I think that's really the other part of giving. And so the donor-advised fund versus a private foundation, there are a number of differences. Interestingly enough, the word private foundation would lead you to believe that it's private,
right.
When in fact
it's anything but.
It's very much not private. When we look at privacy, the private foundation, the donor must file a Form 990. And when they do that, when they file that tax record, it becomes a matter of public record. It contains detailed information on grants, investment fees, salaries, and that sort of thing. And quite frankly, the private foundation is not an economical giving tool for the average American.
Right.
The costs associated with setting up our private foundation, the legal and the accounting fees for incorporation, the IRS filing, and the other documents, they can be anywhere from $5,000 to $20,000.
Yeah, and so in contrast with a donor-advised fund, it's essentially about as difficult as opening up a new bank account.
Right.
You fill out some paperwork, you come up with a name for it, and now you can start to fund it.
Right, and the cost associated with owning a donor-advised fund, generally speaking, 1% of the assets in it or less.
Yeah, account fees, basically.
That's going to vary, from fund to fund and how that all works. But let's talk. I want to look at the privacy side of things because we mentioned the private foundation is very much public, but the donor-advised fund is very different. Complete privacy is available. So you mentioned it's as easy as setting up a bank account, but when you want to make recommendations or grants out, so you put a chunk of money in there, whether it's $1,000, $10,000, $100,000, and you want to start to give that out to your favorite charities, you're basically making a recommendation to give it to the XYZ charity. The nice part about the donor-advised fund as a solution, if you want, you can do it 100% anonymously, so that the charity doesn't even know who it's coming from. That's an option from your perspective. And the other thing is that the information within the donor-advised fund it's aggregated with all of the other donor-advised funds in there. And so it's not as though it's a public record that you've now opened up that says, hey, Joe gave $400 to this charity, $300 to this charity. the public doesn't ever find out about it.
Right. They can look up and they can see that billions and billions of dollars, for example, you mentioned National Christian Foundation that we work closely with. They can see that billions of dollars are sitting there and flowing through National Christian Foundation, but they have no idea what part of that you represent or who specifically sent those dollars out. And the anonymity, I think, is a big thing. That's big for my wife and I. We're doing the same thing that we're talking to you about right now. We're putting all of our charitable donations are flooding into our donor advised fund right now, and just our own family habit is we tend to give that money anonymously because I prefer that they don't necessarily know where it's coming from. I don't want phone calls. I don't want all the other things that go with that. The only time we don't give anonymously is if someone is expecting that check to arrive. So if I've talked to a particular charity, be it my church or my kid's school or whatever the case might be, if they know some money is coming from me and they're looking for it, then I'll leave the name on so they can acknowledge and see that it did in fact come as I promised. But if it's anything else, we prefer to do it anonymously, and it's as simple as checking off a box on that particular donation that says I want this to go anonymously.
Right. You're listening to America's Financial Headquarters. We're discussing the differences between a donor-advised fund and a private foundation. We're answering a listener question from Steve on the 24/7 hotline at 888-888-9572. If you have questions or concerns and you want us to address them, whether it's on air or off air, we encourage you to give us a call there. One of the other differences, Mike, between a donor-advised fund and a private foundation is the tax deduction limits for gifts of cash and publicly traded securities. Now, we're getting into a little bit of heavy detail here, but from a cash perspective, you can give and receive a deduction of up to 50% of your adjusted gross income. Whereas within a private foundation...
That's for the donor-advised fund, you mean?
Correct.
Right. Okay.
Whereas with a private foundation, you can only give and receive a deduction for up to 30% of your adjusted gross income. Now, you might be sitting there thinking, well, I'm not going to give away 50% of my income this year. But a lot of the times what you'll see instances like that is if they've received, big chunks of dollars, they've received bonuses and they want to get that in, or if they've received an inheritance one way or another.
Large asset, maybe they sold a business, sold a big piece of real estate.
Exactly right. So that's where some of those tax deductibility issues will come in.
And the beauty of that is when you have something big like that flowing through, and now those limits that you just mentioned might be important. With the donor advised fund, one of the things a lot of people like to do is they like to endow it, so they don't have to give it away right away. They might let it sit there for years before they give it all away.
That's right. There's two different schools of thought with that, whether you want to put money in and then give it all away over the course of the year, or if you want to put money in and grow it and only peel off bits and pieces, kind of as you were referring to, and let that donor advised fund grow, for perhaps to pass on for future generations.